On November 3rd, 2025, I made a video telling investors not to buy Palantir stock. I highlighted what a great business it was and highlighted all of its excellent performance metrics, including accelerating revenue growth, expanding profit margins, increasing cash flow from operations to sales, an excellent and super premium return on invested capital, all of which were absolutely excellent, and the company's latest quarterly financial results. So you can see the price chart here for Palantir stock over the last 6 months, even after this decline over the previous couple of weeks or so from 213 down to 166. It's still up over 31% over the previous 6 months, and it's still up over 118% year to date in 2025. And that's the primary reason why I highlighted to investors not to buy this stock. And just to share with you the details, I keep track of all of my ratings and recommendations for transparency, and so you can see how these recommendations have performed over time. Unlike other YouTubers who continue to talk about the stocks that they recommended that are doing well and then completely avoid discussing any of their recommendations that have underperformed, I keep track of all of my ratings and recommendations on this spreadsheet here, as well as the date that I made the recommendation, so we can all keep track and observe the performance. So on November 3rd, I reiterated the hold rating or reinvigorated the rating of do not buy Palantir stock. And my reasoning was that the price was too expensive. And whether I measured the company using the forward price to earnings ratio, or if I evaluated the company utilizing my proprietary discounted cash flow model, the stock looked overvalued. In fact, following the company's latest quarterly financial performance, I upgraded the free cash flow expectations for this company, and I downgraded the risk profile of this company. If you're wondering how I downgrade the risk profile of a company, what I do is I multiply the beta of the company by a number smaller than 1. In Palantir's case, I multiplied the beta by 0.8, suggesting that this company, I feel, is now only 80% as risky as it was last year or measured over the previous 3 years or previous 5 years. Click the link below to watch the full video.